2022 has been tough on all of us, and not only financially. What will 2023 be? And how can we avoid losing money and eventually make a bit of money? I will give you my perspective on 2023 based on research and how I will invest my money in 2023 out of Japan. And hopefully this will give you a bit of ideas. Let's get started. But first, I want to wish you and yours a happy new year. Of course, the start of your year may vary, but I sincerely wish you a lot of happiness, a lot of good health, and if you are lucky, a lot of success. Hello everyone, I'm Yoram from Economia, your destination for financial independence, tips to invest and spend wisely. If you started investing in the last 10 years, 2022 must have felt really bad. It was your first down year. And actually this was spread across the world. As you can see here, the S&P 500 didn't have a very good year, and that was the case in many other markets. We can note the exception of the UK, who did really well despite the economic environment. Now, if you look back 20 years or 30 years or more, this was not a singular event. Markets go up and down, and the economies as well. And overall, you always end up on the top. But what made this year really special is obvious. We got the tail end of the pandemic. Hopefully it's going to be finished soon. We got the war in Ukraine. We got the strain on the overall supply chain. Then we got massive record inflation, as you can remember, as we still experience, and the increase in the interest rate from the central banks. All of this is weighing down on the economy, and the economy is in a technical recession as well. This is a lot of very negative factors that have affected everything and obviously the markets. What does it say for 2023? Even though we're technically in a recession and in a bear market, it doesn't have to last forever. It's a regular occurrence in our economies. And if we look back at World War II, those kind of bear market and recessions have happened every 58 months, and they last on average 11 months. Some are longer, some are shorter. If we look at the recession of 2007, the recession lasted for 18 months. That was a long one. But if we look back at 2021, it just lasted 2 months. So that was very fast. The effect on the economy can be larger because when you enter a recession, you have direct effects, unemployment, on salaries, on sales, on earnings from companies. So it has a lot of tough effects on everybody on the economy. And we've seen that a lot of people are starting losing jobs, which is tough. And we are going to get into a negative cycle because of that. And on top of that, we have the inflation that also is going down a bit thanks to very high interest rate. It's still there, and we don't know for how long it's going to be there and how quickly it's going to go back to the objective of 2%, 2.5%, depending on the central banks. And although the stock market has already priced inflation, interest rate, and probably earnings going down, any change over there might in fact affect the market downwards. And if we look at how the economy should go in 2023 and what everybody says, inflation, interest rates, unemployment, and earnings are going to be key in deciding where the markets are going to go and where the economy is going to go. And I'm not talking about any unforeseen geopolitical event or natural disaster that unfortunately would impact us negatively, but we can't predict those. Now, I gathered a lot of information to see what kind of asset classes would benefit from our environment. And I went to the like of CNBC, Moneweek, Nuveen, etc. They're all in the description down below to see who actually and what kind of asset class would come on top or could come on top. And we have, of course, government bonds first and foremost, given the high interest rate. We have stocks, but stocks like commodity, companies that haven't borrowed too much, so they are healthy, or that have dividend distribution. There's also corporate bonds, obviously, real estate, commodities, and municipal bonds are the ones that are talked about. What does it mean for us investors in 2023? based on the research I did and based on the asset classes that I just showed, I've decided to change my investment allocation and my investment approach in 2023. And I'm gonna discuss it right now. But first, remember, I am not a financial advisor and I'm just a guy on YouTube giving you some information, and I'm doing that for entertainment and information purpose only. Do not take any financial advice from me. Do your own research. Because I worked for these companies for a long time and I've started investing when the dot-com bubble bursted many years ago, I'm quite exposed to technology companies and overall very invested in stock and real estate. So I'm gonna have to change some of my allocation this year. But first, let me show you what my overall investment portfolio looks like. As you can see on screen, it's heavily invested in equity, in real estate, no bonds, and a big cash position and a small crypto position. Now I definitely need to do some rebalancing based on everything we discussed. I will obviously lower my exposure to technology and try to look more into commodities and dividend stocks. Real estate will stay the same, but I may actually look and increase my investment for rental real estate. I already own two, as you remember, and you have this video here if you want to know more about it, but only if something interesting comes up. I have no bonds, so some of my cash, this big cash position, is going to go into bonds to generate more revenue, but not too much. I want to keep some cash in case some opportunities come up in the market and in real estate. And actually, it's a bad teaser, but there's going to be something about real estate coming in a couple of months. It's not rental, but you'll see, it's still an investment. For crypto, I'll continue investing on the top cryptos because I'm a firm believer in the technology and how this is a good vehicle to balance the portfolio. But I will keep it under 5% on the overall, and I'll concentrate on Bitcoin, Ethereum, Solana, Cardano, though things may change because we've seen what has happened at the end of last year and the implosion of FTX and a lot of others. The eagle-eyed viewers would have recognized this kind of allocation. This is based on the Awesome portfolio, which says 35% stock, 55% bond, 4% commodities, 4% gold, and 3% gold, 4% real estate, right, or REITs. Of course, I'm not going to go to gold. I prefer going for crypto in that one. And I probably won't go 55% into bonds, but I will try to lower, obviously, the stock and increase the bonds to have a better balance. And I think this should help a lot for 2023 to ride this very uncertain market until we see clearer where we're heading. And when I'm rebalancing my portfolio, especially on the stock market, I'm not going to go about stock picking because it doesn't work for most of us. It's not me saying it, it's Warren Buffett. He said it in 2020, saying, and I quote, "In my view, for most people, the best thing to do is to own the S&P 500 index fund." And actually, he said the same on an article for CNBC that I'm showing you on the screen right now. So I'm going to go for index funds and ETFs because they are low fees and I don't have to worry about which stock to pick. They're going to do that. They are professionals. It's going to be perfect. And for me, it's going to be easier to manage and to do it regularly. When I say regularly, it's because I'm not going to try to time the market. Nobody can do that. And actually, Ray Dalio, another big investor, says it better than me. It's more difficult than the Olympics. So I'm not going to do and try to time the market. But I'm going to concentrate on my time in the market, meaning that I'm going to use dollar cost average. I'm going to regularly invest in the market for the high and the lows just to average my cost basis and always be invested. A lot of research are telling us that if you miss sometimes a few days in a year, you miss the best days of the market. You can't know which are the best days in the market. That's why you should keep investing regularly with recurring investment. Maybe they are weekly, maybe they are monthly. This is up to you, but this is quite important to continue dollar cost averaging. And I will buy ETFs and bonds like an S&P 500, like a global ETF, a global bond index, REITs when I don't buy real real estate, and on the side, crypto as well. 2023 will not be easy for anyone, but with the right amount of research, we should have a chance to make some money. If you want to know more about the different types of investment portfolio, do not hesitate to check this video for details. Thank you so much for watching. If you like this video or learned something, please give it a like and subscribe. If you want to share any tip or have any comment, please go to the comment box below. Thank you again, and until next time, goodbye.